Shifting focus to the landlocked West African nation of Mali, where the junta government and the Canadian firm Barrick continue to remain at loggerheads. In the latest, on Thursday, Malian military helicopters landed unexpectedly at Barrick's Luolo-Guankoto mine. The company said that the military choppers seized over a metric ton of the precious metal from one of the world's largest gold complexes. The bullion was worth over $100 million. Earlier in January, the junta government seized 3 tons of gold from the same site. The junta-led Mali government is now planning to sell this gold. Now, the provisional administrator of the mine and a former health minister, Soumana Makaji, has said that he plans to finance the mine's operations from the money that will come from the selling of the gold. Barrick, on the other hand, has issued a statement calling the plans to restart operations or sell gold from the site illegitimate and ill-advised.
No press conference, no dramatic speech. On June 30th, 2025, Mali quietly took back its gold. The announcement came as a legal decree in the government's official gazette, not a headline-grabbing event. Decree number 2025-047/PRM declared the full nationalization of the Yatela and Morila gold mines. The state assumed operational control immediately. Global financial centers were caught off guard by the understated move. Mali's government timed the decree for market closure, minimizing panic and allowing the news to settle. The official statement focused on correcting economic imbalances and ensuring Malians benefit first from their mineral wealth. There was no anti-colonial rhetoric, just a calm assertion of sovereignty. The legal groundwork was solid, citing the 2023 Mining Code, which had already increased state control. Nationalization was presented as the logical next step. For Mali's transitional government, this was a statement of sovereignty and a break from decades of lopsided contracts. The quietness of the act was its power. No rallies, no threats, just a decree. The message: this was not a negotiation, but a new reality. The government had weighed the risks and decided the nation's future depended on this action. The world was left to react to a fact, not a threat. On a Friday afternoon in Bamako, Mali changed its destiny. Yatela and Morila, names tied to immense wealth, but not for Malians. Morila, once among the world's most profitable gold mines, and Yatela, both run by foreign giants, produced millions of ounces of gold. Yet, local communities saw little benefit. Profits flowed abroad. These mines were products of the 90s liberalization, with contracts favoring foreign investors. Long tax holidays, low royalties. Mali became a top African gold producer, but remained poor, reliant on aid. As ore quality declined, foreign operators wound down, leaving behind depleted sites and economic disparity. The nationalization wasn't just about assets. It was about reclaiming history and rewriting Mali's future. For too long, others wrote Mali's story. Now Mali is taking the pen. The exit of multinational miners from Yatela and Morila was gradual and calculated. The mine's richest ore was gone. What remained was costly and complex to extract. Diminishing returns made these sites non-core for companies like AngloGold Ashanti and Barrick Gold. Mali's new mining code increased state stakes and signaled a shift. Foreign firms saw the writing on the wall. Political and security risks in the Sahel further discouraged investment. For the companies, it was easier to divest than to upgrade aging mines under uncertain conditions. They sold to a local firm, ending the era of foreign giants. The state saw opportunity in the vacuum left behind. With new resolve, Mali decided to take control. The era of extraction for export was over. After nationalization, Mali launched a bold plan to revive Yatela and Morila. First, invest in people. A nationwide program will train Malian engineers, geologists, and technicians, ending reliance on foreign expertise. Second, overhaul management. The new state-owned Sogom SA blends public accountability with private sector know-how. Profits will now flow to Mali's treasury, not foreign shareholders. Third, modernize. The government is investing in new technology to process lower-grade ores, aiming to make the mines profitable again. Funding comes from the national budget and development loans. Sustainability is key. A portion of revenue is earmarked for local development schools, clinics, clean water. The goal, not just to extract gold, but to build a self-reliant industry. Mali wants these mines to become engines of national prosperity. The plan is ambitious, but for the first time, Malians are in charge. The future of gold is now in Malian hands. Mali's economic projections for nationalization are transformative. Under the old model, Mali kept just 20% of gold revenue, the rest left the country. Now the state aims to retain 70% after costs, a dramatic shift. With a target of 500,000 ounces per year, Mali could see over $800 million flow into its budget, nearly 40% of the national budget. This revenue will fund infrastructure, education, and healthcare. The plan is to leverage remaining reserves with new technology. The numbers are ambitious, but the assets are real. For Mali, gold is no longer just a source of foreign currency. It's the engine of national development. If successful, this will be the most significant economic event in Mali's history. The stakes are high, but so is the potential. Mali is betting on itself. Mali's quiet decree sent shockwaves through global markets. Mining stocks with West African exposure tumbled. Investors saw new political risk. Analysts called it resource nationalism and warned of higher borrowing costs for Mali. Some noted the assets were already abandoned by the majors. This wasn't a sudden expropriation. The real test: can Mali run the mines effectively? International institutions like the World Bank and IMF expressed concern, fearing a challenge to decades of liberalization. For them, Mali's move questions who should profit from Africa's resources. The market's reaction was more than financial, it was ideological. Mali's action has sparked a global debate about sovereignty and ownership. The world is watching to see what happens next. Mali's move is part of a regional wave of resource nationalism. Across the Sahel, new leaders are challenging old economic structures that favored foreign interests. Burkina Faso is building its first state-owned gold refinery and revising its mining code. Niger is reviewing contracts with foreign uranium companies, demanding more local benefit. Guinea insists on local processing before iron ore exports. These countries argue that true independence means controlling their own resources. Regional alliances are forming, united by a desire for economic sovereignty. Mali's nationalization is a declaration. Africa's wealth should serve its people. The region is charting a new course. For villagers near Yatela and Morila, nationalization brings hope and skepticism. Many, like Amadou Traoré, hope for real permanent jobs and a share in the wealth. The promise of hiring local engineers and buying from local businesses resonates deeply. But memories of broken promises linger. Some fear the new state company could become another source of corruption. Village elders ask, will the benefits reach us, or just the powerful in Bamako? The local development fund is critical. Success will be measured in schools, clinics, and clean water, not just gold output. Support is conditional. People want proof, not just promises. For Malians, the gold has always been theirs. The question is who it will serve. They are hopeful, but waiting for results. The government's challenge is to turn sovereignty into real change. The people are watching. Mali's golden gamble faces real challenges. Security is first. Protecting mines from insurgents is costly and complex. The army is stretched thin, now tasked with guarding vital economic assets. Artisanal mining and gold smuggling siphon off huge amounts of untaxed gold. The state must formalize this sector, offering better deals than smugglers without provoking conflict. Infrastructure is another hurdle. Power outages and poor roads threaten efficiency. Upgrades are planned but will take time. Corruption and mismanagement are risks for any state-owned enterprise. Success depends on transparency, merit-based management, and anti-corruption measures. Overcoming these hurdles is as crucial as the gold itself. Nationalizing Yatela and Morila is more than a business move, it's a new chapter in Mali's identity. It challenges the old model that said only foreign investment could bring development. Mali is betting on sovereignty over dependency. If Sogomese succeeds, it could inspire a wave of state-led development across Africa. Success would prove that Africans can manage and profit from their own resources. Failure would reinforce doubts about state-run enterprises. The stakes are high not just for Mali, but for the continent. This is a test of vision, discipline, and unity. For the first time, Mali controls its most precious asset. The quiet decree of June 30th was about more than 2 mines, it was about a nation's future. Mali didn't just take a mine, it took back its destiny. The world is watching. This is Insight Africa, where gold stays to build the continent's future.